Good evening, everyone. I hope you're all having a wonderful day. Happy to be back from vacation as I've been gone since I believe Friday of last week. So we got a lot to catch up on. Had a good vacation week. Happy to be back in the markets. Happy to be back at my desk trading. Uh, so let's go over what has occurred in the last month, the last several days. Get you guys caught up on what has been happening around uh, the markets this time of day. So, first things first, let's look at the monthly chart. All right. Remember, before I went on vacation, before anything happened, before the end of the month closed out last week, or rather this week, um, I said we need to find acceptance over 4141 and move higher into the 4300 level, or more specifically, the 4327.50 level, and get above this monthly high back from August of last year. Once we got above that high, my monthly would go from balance to one time framing up. Now, keep in mind, some people had this as a small balance here and they were calling it one time framing up. Well, guess what? They're firmly back in balance. After last month was a failed attempt at an inside month up. We didn't find much acceptance over that 4141 level. And then this month, we take out last month's low already within the first 2 days of the trading year or a trading month, excuse me. So we've taken out last month's low, not by a lot, but we have taken it out. Uh, and we've put the monthly back into what some people will call a 5 month balance. But for me, I'm still expecting a lot of chop on a monthly time frame inside of this large range from 4327.50 to 3502. And now you can see that here in the middle of the range, we've been kind of contracting. So last month, or the month of, let's see here, the month of January was a 294 point range. The month of February was a 261 point range. So we can kind of expect that maybe this monthly range will be a little bit less, or about the same, roughly about 250 points, either to the upside or to the downside. Either way, range has been contracting, volume's been contracting a little bit on a monthly basis. Let's go into our weekly. Let's look at our weekly time frame now. Something interesting is happening here, right? We broke out that downward trend line. Now look at it. We are visiting that downtrend line once again. And if I were to adjust this just slightly, you could see that we're just hovering right above it, right? So far, the trend over the past several weeks has been higher high, higher low, higher high. Are we potentially setting in a higher low and back testing this downward trend line here? Now, what you don't want to see as a buyer is getting back below this trend line and then below our moving averages on the daily time frames. We'll look at that here in just a second. But as far as the weekly goes, we were at one point in time in a weekly balance. We broke that weekly balance low and began one time framing down. We are now one time framing down 2 weeks in a row now. So the monthly's balance, the weekly is trending lower, one time framing down 2 weeks in a row. Uh, if you were to take the range of this week, of the previous week, and kind of overlay it on what we've done this week, we will either test more of this, back test more of this downward trend, or we'll take back some of the sell pressure from the previous week. That's a possibility, but as of right now, weekly's one time framing down, trending lower, but in the week since, as we have not gotten much range and extension past the previous week's low. But keep in mind, things are trying to change. So far this year, buying the dip has happened or has worked well. And over the past several weeks, buying dips have worked well. It's just another case of where we're buying the dip. Is it a good opportunity for those that have missed out down here and here to potentially get the weekly back into a balance and continue to grind this thing back up into the 4,300 level, which is my monthly balance high, right? Do we finally attempt to find more acceptance above the 41 level? Yeah, time will tell, right? So that's what we're looking for. Let's go over the daily. Daily, same thing, right? It's back testing that downward trend line, but we have now, over the past several days, we were in a pretty decent balance. We broke that balance. We were one time framing down 2 days initially until today, where we had an outside day up. Now, some people are going to say it's due to Bostic, Fed Bostic coming out saying something about the 25-point basis rate hike, that they're firm and sticking with it, and that inflation's under control, blah, blah, blah. That may have been a catalyst, but what has the market been trying to do? The market was trying to move up after taking out or opening below the previous day's low yesterday, and not getting much extension below it, or holding the gap because we opened with a gap, holding the gap and finally getting some moves to the downside. They bought this thing back up, and what happened? We ran stops and shorts began to panic back above the 200-day moving average here and began to cover their shares to the upside, providing the bid, helping us move, of course, momentum buyers stepping into the market. So 200-day moving average was down at 39.4856. That was around the 39.50 level. Big area that we were battling for all of yesterday. It was a pretty big battle there. And then today it was a decent battle in that range. And then we got some good short covering above that area. So the daily it was in balance initially, in this large balance. And then we went to one time framing down, and then we put the daily back into a balance. So you can say that we are now in a 3-day balance. So I'm going to move our balance high down here to 4,350, because I think above that you'll get some pretty good extension to the upside. So 4,350 will be our balance high now. And then today's low will be our balance low. And the reason we're back into balance is because we closed with an outside day up. So after taking out the previous day's low, we also took out the previous day's high. And all that means is we are in balance. Had we not gotten much extension above the previous day's high, it would just be initially a 2-day balance, but we're going to encompass this day from the 28th of February and call it a 3-day balance. So the balance low here is down here at 39.31. So we'll edit this, make it 39.31 to align with where we think our balance low is. So now what are we looking for? Well, right now we're trading in between the 200-day and the 50-day moving average, right? Trading in between those areas. We didn't find much acceptance below the 200-day the first 2 times we've attempted so far. Now we're back testing the 50-day moving average, and it just so happens to be right above where we are now calling our daily balance high. So that will be an area where you can expect to find some resistance, to expect to find some sellers, and a little bit of liquidity there. However, if we find enough buyers, we should move through that pretty easily, get above this other daily high, and then work our way back up, taking out previous daily highs, and then getting up to the 20-day moving average, which is up here at 40.68. So that's what buyers are attempting to do. However, if we roll over, get below the 20-day moving average again after failing to break out of our balance high, get below the 200-day moving average, and we take out our daily balance low, then the daily will resume back to one time framing down and continue to sell off even lower. So all of this whole area up here is where trapped buyers are at currently. So all these buyers that were trapped up here, they sold off, right? Now we're trying to find some accumulation down here around the 200-day moving average to move back up into this 20-day moving average above the 50 into the 20-day moving average of 40.6825 or 40.68. So let's see if we can find some accumulation, find some more buyers here at a higher price to rotate this thing up, or do we continue to find supply as all these trap longs are now even more so panicking because we've attempted to get below the 200-day moving average multiple times. Let's go into our 30-minute time frame. First and foremost, I want to show you guys this downward trend channel that we've been inside of. I posted this on my Twitter, but it was in the hourly chart. But same process, same thought process. Is initially whenever we were right around here, around the 39.77 level, which was near the top end of this upper downward trend channel, right? We were finding some resistance, and I was saying, do we find potential sellers here establishing a position defending this trend, or do we finally get some more short covering above this trend if we break it? And that's what is occurring right now. We look like we are breaking that trend and attempting to find some buyers and short covering as we did push up later in the day. Let me finish labeling these time frames just so I can review what happened in the 30-minute intraday time frame. And as you can see, I went back through on the rest of these days and added my time or my levels in this morning as I did my homework because I hadn't been here for the past several days. Anyway, initially early on in A period, we opened up with a gap down here below the previous day's low. The previous day low was at 39.43. We opened up below at 39.35. So roughly 10 points, 8 points below the previous day's low. And we attempted to push into this set of single prints from the previous few months. Back in January of the 20th, there was a set of single prints there where we could have potentially found buyers or trapped shorts that were still waiting for their bids to be hit. And that's exactly what happened because it's an intraday gap. We came back to it, filled in that area with a little bit of volume, stopped at 31, didn't quite fill it, missed filling it by 2 ticks, and then we reversed back up to the upside. I had an initial long early on in the morning. Prior to the open, I was long 33. And as this thing rotated up, my initial goal was to fill the gap because I seen that we were not early on in the morning session, that we weren't really attempting to push lower. It was weak volume. And then when we opened up, we should have sold off pretty strongly and filled this set of single prints, but showing that we didn't fill that set of single prints, I was comfortable with my long at 33. And as this thing rotated up to 43, I got out of my position on a nice, I believe I had a 5 lot on, nice 5 lot to take home early on in the day. And then I lost on another long later in B period, but I'll discuss that here in a second. So we did fill the gap in A period, and then in B period, initially we had a lowest accepted price. Now all that means is right here where A period opened up, or A period closed, B period opened up and shot up initially. We started a 1 time frame up, and I thought odds were pretty good that we'd go up and get this 9Y point of control as it acts as a magnet. So the 9Y point of control from the previous day was right there at 52.25. I felt like odds were good to go and get that. However, we pulled back in B period, felled the lowest accepted price, and that's where I had my stop at. So I felled on because I was long above A period, and then as we came back in, got below where the lowest accepted price was initially, and VWAP was right around that area. I got stopped out of my trade. And then I didn't take another trade until E period because we attempted to go trend in B or and backfilled in C period, but we were 1 time framing up. Same thing in D period, began to 1 time frame up, but came back in. We were at the time 1, 2, 3, four wide once E period opened up. So we had a forward wide point of control. So there was a little bit of rotation early on in the day before this big price spike. So decent rotation. And then on the pullback in F period, I was looking to get long around the 44 to 45 level, as it was a good risk reward against E period's low, which was at 42.25. Had we gotten below that, I would have got out of the position. Actually, I wouldn't have. I had my stop actually at the day's low, because I was planning on adding on more of a pullback, because I felt like odds favored going up and getting to basically where settlement was, right here at 59 end period. So I was expecting us to at least rotate back up to that 59 area, as I seen that there was decent liquidity up there. And then you could see here on the, it's not going to show it, is it? You can see early on here, there was a lot of liquidity sitting at that 50 area. And then once we chewed through that, the next area that we had some liquidity issues at, or attempting to get above, was at that 55 area. And I was saying that if we could get above that 55 and create a new high of day, then you had really good chance of pushing up to the 59 area and above. And that's exactly what happened, as we started to grind back up in F period because we couldn't take out E's low, began to grind up higher. I held on to my position. I had an 8 lot on, took some off at 52 back at that point of control just to take a little bit of profit. And then I initially had the rest of my order to sell up here. The rest, I think I took 2 off and then had 6 resting up here at 59 to take off. And then in I period, obviously we spiked with a catalyst. But once we ran these stops in H, G, and D period, as we stopped out anybody that was attempting to sell here, once they stopped out of their positions, it obviously provided a pretty good bid and pushed this market up higher. And I got out of my trade here at 59. Overall, ended up on the day roughly 60 points. It's a great day to end it on. After that, I didn't take a single trade because I didn't know what the market wanted to do, didn't know how volatile they were going to be with it. And so this market began to grind up even higher than I anticipated. Grinding up, getting that afternoon rally high from the previous day and the previous day's high, creating a triple distribution. So what does that mean? Well, triple distribution. Let me get rid of these destinations real quick. So triple distribution just means we had this area here where a lot of volume was done, right? Had some consolidation, price was absorbed, and then we had an intraday gap or a large set of single prints, and then we had it distributed here, as we had those that were buying here, they distributed up here selling, and we found more buyers, which led this market to push up higher in L and M period, creating a triple distribution because we had another small set of single prints right here. So another intraday gap. So those that bought here distributed up here. So triple distribution, a price probe, our high of day, 2 sets of single prints, and the day's low is all we go out with. This was an 8Y point of control. Won't ignore it if we did start to fill this set of single prints, but doubt we'll get back to that area. So let's go ahead and mark our destinations for tomorrow. At tomorrow's trading session, 39.31 is today's low, so we'll mark that. 39.31, our low of day. Low of day. Boom, boom. All right. We have an afternoon pullback low. This is a textbook afternoon pullback low because we have set of single prints above. You either have it above or below. This is a textbook afternoon pullback low. And you can see supply shut off right there at E's low at 42.25. So 42.25, if we were to pull back to that area, you could potentially find buyers, because if there were buyers there at that point, you should continue to find buyers there again. So afternoon pullback low. That's also one of my favorite setups. As you guys probably know, if you've seen any of my other videos, I enjoy the afternoon pullback lows. It provides a really good opportunity to buy if you missed out buying near the lows. So afternoon pullback low. However, like I said, I didn't take advantage because I was not expecting this big of a move. Early on when I was long at 33, initial was to fill the single prints. And then when I was long on the pullback, it was to get up to 59 and where I would have taken off my trade, and I did. So stuck to the plan, made money. However, I could have gotten involved later in the day, but did not because I'd done really well and didn't want to see myself give any profits back. Sometimes you got to know when to do it and when not to, when to push it and when not. All right, anyway, single prints fill here, the first set. So this is the lower distribution. So this will be you'll treat it as 3 separate days initially. So basically, right here where the single prints fill, it will be the upper portion of the lower distribution, if that makes any sense. So 54.50 is where the single prints fill. Single prints fill here. Boom. And they start at J's low. And then J's low will be the lower portion of the middle distribution. So you'll treat that like a low of day, right? And if you get below that hypothetical low of day, then you'll look to fill that gap, the intraday gap. So single print start here. Once again, thanks for stopping by, guys. If you are enjoying the video and enjoy the content, please leave a like. If you're new here, subscribe, as this is gold information and destinations here that you are being given for free. Anyway, so that is you got your lower distribution here. It starts at 54.50, where that the single prints fill, and then it's the lower end of it is 39.31. Now for the middle distribution, the lower end is 39.6825, and the upper is 79.75. And that is where the next set of single prints or our intraday gap fills. Single print fill. And then they start here at 25. Boom. Single print start. A lot of twos there. And then as far as the upper distribution, it starts at 81.25. And the high of day, all of M's range basically is the upper distribution at 95.25. And then obviously we'll mark our price pro, but this will be the high of day. Go ahead and mark that. And then let's go ahead and mark our price pro. So the most bullish thing you could find for buyers is to find acceptance above our price probe at L's high, which is 84.50. So you want to open up above 84.50, and you do not want to come back and back test, because where there were buyers today may not be buyers tomorrow if we get below it. And then obviously you'll look for single prints to fill. So as far as destinations go, on the upside, you have today's high, 39.95.25. You get above that, you should go and see 4,350, which is our balance high currently. I'm going to go ahead and label this balance high so I know in the future. But that is our balance high, 4,350. If we get above that, then you should have no issue getting above the afternoon rally high, 4,650. and then moving up to 4,024.75. And that, of course, means we would be above the 50-day moving average once again. For the downside, price pro 39.84.50. You get below that, you can look to fill the set of single prints here at 81.25, and they fill at 79.75. You find acceptance into the middle distribution. You will go and rotate down to 39.68.25, where you'll look to find buyers initially. If you do not hold, then you will look to rotate, backfill some of the single prints, take back some of this trend day, and then they fill at 39.54. What buyers do not want to see is getting back below the 200-day moving average, filling this large set of single prints, and then finding acceptance in the lower distribution that starts at 39.54.50. Afternoon pullback low would be the next destination on the downside, 39.42.25. And then today's low of day, balance low, which I'm going to label as well. Balance low initially, 39.31. So if you're a buyer, you do not want to see us get below the 200-day moving average and take back this trend day. You want to see us stay above the 200, find acceptance above the price probe, take out our balance high, get above the 50, and continue to rotate higher if you are a buyer. As far as a seller, you want to defend the balance high. Don't let us get above the 50 and then take back this trend day to the downside. Thanks for stopping by, guys. Once again, I'm happy to be back. Happy to be bringing these videos. Hopefully, I can come out with some more concise and consistent content and potentially make some different videos. Anyway, thanks for stopping by. We'll catch you guys in the next one. See you.